Hello, I'm Patrick South. I'm Vice President of the Development at the Chamber of Digital Commerce. For those of you that are unfamiliar, the Chamber is a nonprofit trade association based in Washington, D.C., where we promote the acceptance and use of digital assets and blockchain-based technologies. If you'd like to become more familiarized with us, you can visit our website at digitalchamber.org, or you can contact me, Patrick, at digitalchamber.org. I couldn't be more excited to bring to you the third and final series in our RIA, or third and final webinar in our RIA educational series. This webinar is around current and future investment options as it relates to digital assets. For those of you who have joined us for the entire journey of this series, we started with digital assets, why now, right? Speaking about the macro environment. We then pivoted to some of the current barriers to investment, particularly regulatory and compliance hurdles. And we now have our final series, which again is tiered, our final event, which is geared towards current and future investment options. And we have a really stellar group of panelists joining us today. If you'd like to see the other two previous events, my colleague Jonathan will paste those here in the chat for you to consume at a later point in time. What I do want to encourage for the next 60 minutes is we want this to be an engaging session. So the panelists will be paying close attention to the Q&A function. So I really encourage all of you to ask questions that are on your mind so that we can ensure that we're providing content that's interesting and relevant to the audience at hand. With that, I'm going to go ahead and introduce Jason Myers, who's a partner at Clifford Chance, who will be our moderator for today's discussion. Jason, over to you.
Thanks, Patrick. Well, good afternoon. As Patrick mentioned, I am a partner in the New York capital markets practice of Clifford Chance and focus on public and private capital raising transactions with a focus around real estate, specialty finance, and fintech. But I'm very excited to be the moderator today for this rock star panel. And I think, you know, as Patrick mentioned, the focus of this panel today is on you know, how financial advisors can gain exposure or get their clients to gain exposure to digital assets and what those current and future investment options look like. So I'd like to introduce our amazing panelists and let them say a few things about themselves and their companies. Will, you want to kick it off?
Yeah, absolutely. Thanks, Jason. My name is Will Peck. I'm head of strategy and emerging technologies at WisdomTree. We're a roughly $60 billion asset manager. I'm sure many of you know us. We're roughly 60% here in the US, another 40% over in Europe, all within the exchange traded fund and exchange traded product structure. So we're interested in digital assets on a couple different ways, which we can talk about further as this panel goes along.
Hi, everyone. I'm Sharif-Askary. I head up investor relations and business development at Grayscale Investments. We are the world's largest digital currency asset manager with about $7.5 billion in assets through our 10 products, all of which giving institutions and individual investors safe, secure access to the digital currency asset class. And in my role, I'm constantly speaking with investors about how digital currency fits within their portfolios. And a lot of those people are financial advisors.
Hi, everybody. My name is Zac Prince. I'm the founder and CEO at BlockFi. We are a financial services provider in the digital asset ecosystem. We have a suite of products that's available to folks today that provide the ability to earn interest on your digital asset holdings, the ability to buy and sell spot cryptocurrencies, and the ability to get a loan secured by the value of your cryptocurrency portfolio. Additionally, we're one of the largest financing providers to institutions that are actively participating in the ecosystem.
Hi, I'm Jeff Dorman. I am the co-founder of Arca and the chief investment officer. You know, my background is at Lehman Brothers, Merrill Lynch, Citadel, you know, traditional finance places, and I co-founded Arca actually with the co-founder of WisdomTree, who used to run the business that Will now works for. And we are an innovative investment management company focused on digital assets and blockchain. We have two sides of our business: Arca Funds, where we are managing actively managed funds investing in digital assets, and Arca Labs, where we are creating new infrastructure and new investment vehicles, including Rcoin, which is the first ever SEC registered bond fund whose shares trade exclusively as tokenized assets.
Hello, everyone. My name is Tyrone Ross. I am the son of superhero parents, licensed investment advisor, and co-founder and CEO of Onramp Invest, which is a platform that will finally allow financial advisors to do everything we're going to convince them to do today.
Well, thanks for all that, panelists. Why don't we get started? So Wall Street has been very bullish about Bitcoin recently, and last week JP Morgan said in a note that Bitcoin could compete with gold as an alternative currency, driven by the demand among millennial investors. And earlier this month, Fidelity released a report stating that Bitcoin is potentially a useful asset for investors seeking uncorrelated returns. So I'd just like to direct this first question to the entire panel. Jump in as you see fit. But why should financial advisors be paying attention to digital assets?
I can kick it off. I think there's certainly a lot of compelling reasons, but the biggest reason is because their clients are asking for it. We're now living in some pretty unprecedented times where the policy response to COVID has resulted in an unprecedented monetary stimulus, and individuals, institutions are all taking a very hard look at digital currency as an asset class. And so more increasingly, they're asking their financial advisors. And I think that they're realizing that this is something that's going to keep happening more and more as the value of fiat is increasingly drawn into question.
Yeah, and I think just to add to that, one of the challenges I think folks in the financial advisory space have had historically with digital assets, and you can see some of this in the changing of the tone from folks like Wall Street and JP Morgan, who a few years ago were saying this whole thing's a scam, and if anybody that works here trades it, they're going to get fired, to now releasing research notes that are very bullish on it. And I think the challenge that's presented there is you can get into these philosophical debates about what cryptocurrency is doing, what Bitcoin is good for. And I think that our industry, when we're talking about it, and also financial advisors in conversations with their clients, would be really well served to just look at the data. Look at the data on inflows into Grayscale products. Look at the performance and volatility and diversification benefits data of this asset class through its now 10+ year history, including through a pretty dramatic economic event where it not only survived, but has performed incredibly well this year, better than every other major asset class, if you look at just Bitcoin versus those. So, try to take the philosophy out of it, try to take a data-driven approach to understanding what this is and using that data to inform your conversation with your clients who are definitely thinking about it, if not already asking about it. And then understand the ways that, folks like the ones on this call can enable you to offer something that's compelling for your clients' portfolios.
Yeah, Jason, just to piggyback on some things Zac said, I think it's important to help educate clients in terms of what, we say digital assets as an asset class. There's really a whole host of different things that have totally different investment propositions within that category, some of which, frankly, don't have investment propositions, in my view. So I think, at least at WisdomTree, we view Bitcoin as an investable asset class, studying different ways that you can use it in a portfolio, different benefits it might have. But I think it's really important for advisors to understand, Bitcoin's one thing, some little coin that's incredibly volatile and has no liquidity is an entirely another thing. And just helping your clients understand that's very important.
Yeah, I want to piggyback on that because Will makes a really important point here. A lot of people think cryptocurrency and digital assets and Bitcoin are synonymous. In fact, all of the largest companies out there with products, like most of the people here in the room, these are Bitcoin products, Ethereum products, maybe a few others, and they're great products, and people should definitely be looking to those. But if you think that you're representing the entire digital asset space by buying Bitcoin or by buying Ethereum or by buying a large cap index, you're really not. It'd be the equivalent of saying you're a tech investor because you bought IBM and you missed out on everything that's happened in the last 10 years with social media. A lot of the other digital assets that exist are not necessarily for everybody. And again, the educational component, the research is really important. But there are 4 distinct categories of digital assets in our opinion at Arca. You have cryptocurrencies, which is what Bitcoin is. You have protocols and platforms, which is where Ethereum lies. And then you've got this whole other wave where we call asset-backed tokens, tokens that are backed by a hard asset or a hard income stream. And you have pass-through tokens, tokens that have hybrid equity utility properties where you're actually getting a real revenue stream. So you just have to be really careful not to lump everything together and make sure that if you are going to invest in digital assets on behalf of your clients, you actually know what you're doing. If you have a Bitcoin or cryptocurrency thesis, that's great. If you have a more of a tech thesis, you have to look elsewhere within this space. And I think learning that is really important before you put your clients into this.
I think I'll tidy all of that by saying, when I started to do this as an advisor 4 years ago, one of the things that was really important to me was to get advisors education. If you listen to everybody that's had spoken before me, this is what I try and get financial advisors to understand. These are the things that are happening away from you in your practice. Why financial advisors should care about Bitcoin and crypto and tech protocols and all these other things. Yes, your clients are asking about it, but for financial advisors, this is what is the most important thing. Probably the most important thing I know I'll say. You will not get fired because you didn't allocate to Bitcoin. Don't believe that lie. You will get fired because your practice is not set up, right? And you are not well versed and you are not conversant. And your clients are going to go to advisors that are frontier and thinking and next gen. That's why you will get fired. Because the truth is, an advisor will not lose a client over one investment if they do holistic planning and they built a relationship with that client and they have trust and they do estate planning and tax planning and everything else and they have the children and it's truly holistic. Don't believe that. Why you will get fired is because a client is going to say to you, I have $50,000 at Coinbase, and your answer is still, it's baby brains, or I don't believe it's a thing. They're going to pick up and walk out and go to an advisor that says, I haven't even figured out what it is yet, but I'm listening. I have some materials here, right? I read this letter from Arca, right? I'm going to share this with you. Here is a branded hardware wallet with your firm on, and say, we're going to get to this at some point. We're going to talk about that. They'll have copies of crypto assets and say, this is something that I've read, right? They'll have podcasts and materials that they will put in front of the client, compliant approved, right? And then everyone is saying, this is an education. I'm going to educate myself. I'm going to educate you. And when the time is right, dependent upon your goals, risk tolerance, financial plan, right, around any particular crypto asset we talk about, we will then be able to do it constructively aligned with why you came to me in the first place. And then the client will go, oh, okay. Didn't even get into SHA 256 and mempools and everything else. It was just the advisor was compliant and ready, practice setup, practice management, as opposed to just gung-ho on 1% allocation.
So I think you all have, shared a number of good reasons why FAs should be looking and thinking about this asset class for their clients. But in talking to FAs, what are they telling you? What are some of the hurdles or some of the pain points around just getting their clients exposed to this space? Maybe Ray and Tyrone, you can kind of kick us off here on this one.
Sure. I think it fundamentally, it has come down to, like others have said, education, and like Tyrone has said, access. Education is something, all of us here, we're spending time, we are committed to increasing education. And then on the access front, folks have come to me and the way they see it, they have 3 choices, right? So they don't have access on their platform, so they can engage in some sort of grassroots effort, perhaps overcome institutional inertia to get the setup, to get something available, or they can advise or allow their clients to just go away from the platform, go in an exchange, buy digital currency outright, hopefully not lose the private keys, and face the challenges associated with doing that. or they leave the platform or just send them away, and then they come to us. And, you know, we have a lot of those conversations.
The issues are plenty, but let's just start with layer one. Where is the advisor? Is it a wirehouse advisor? No go. Hybrid? Well, you got to disclose it. You start to have some conversation. Are you truly independent RIA? Now we start cooking with grease. Next level, is that advisor a money manager, or is that advisor a financial planner? Then you got some in the mix that are investment managers or whatever. Now we really start getting into the problems and the issues. Is that an SEC registered advisor? If you are, 4 things you need to be worried about right off the bat. Qualified custodian. Second thing is the manner and where which those assets are held. I venture to say right now, there's not a financial advisor in the country that can clearly articulate to a client the manner in which digital assets are held. 3, the reasonable expectation that that custodian is going to send your client statements. If you are SEC registered RIA, who do you want your client getting statements from? And last, as they all know right now, and they're going to nod their head in agreement, that surprise independent audit that's going to come. When you talk to financial advisors about allocating to these assets, you not are addressing those 4 things, you probably have issues. Now, if I'm not SEC registered, probably have a little bit of leeway there, but there are still things that need to come into the fore. Estate planning, talking to clients about digital fiduciaries, talking to clients about, self-custody or, multi-sig or these type of things, tax planning. All of these issues financial advisors do not have right now. And oh, by the way, I'll give you a quick example. Financial advisor sits down with Mr. and Mrs. Client. Mr. and Mrs. Client says, hey, we have an interest in Bitcoin. And the advisor goes, great. That financial advisor right now cannot model for that client unless they use outward tools, right? To model, and I'm speaking strictly from experience here, to model for Mr. and Mrs. Client, go back to Mr. and Mrs. Client and say, here's a model of Bitcoin in your portfolio based on what it was before. Here are the changes, non-correlated asset, all of the big words we like to throw around. Mr. and Mrs. Client say, Mr. and Mrs. Advisor, do it. The advisor goes back to their existing workflow. They can't then pull that into an existing plan, model it, and execute that trade. So then it pulls in to get performance reporting, to do billing, all this stuff in a seamless manner. It does not exist yet. So we haven't even gotten into the regulatory as well, because there needs to be more SEC guidance on custody. There needs to be more SEC guidance on what advisors are able to do, right? Advisors want Bitcoin to be a security for a reason. It's not a security. So then what happens? FINRA says, hey, you better tell us what you're doing, right? What are you doing around it? We just want to know whether you own it, what are you doing in your firm? You got to update ADVs. You got to archive everything. So financial advisors now, it's easy for me to say, I have a $500 million book of business. It is easy for me to say, I'm keeping it at arm's length until I get more regulatory clarity, until I get the ability to do it in a seamless manner in my existing workflow, does not exist right now. And then the ability to put in front of clients in a compliant manner, something that my compliance officer is going to go, right? And that the client is going to feel comfortable that if something happens, they understand insurance, they understand custody, they're going to understand where their statements are coming from. And they know that I have, again, depending on, right, fiduciary, you got to be careful how we use that, a fiduciary responsibility to that client. There are more questions than answers for advisors right now, which is why the $84 trillion market is very small until these issues are addressed. And the truth is they just haven't been.
Thanks, Tyrone. I think this first segment of this conversation we're having, where I think, as Zac mentioned, Wall Street for a time thought that this was just a scam. And I want to address one of the questions that I'm seeing from one of the attendees around traditional asset managers. And the question is, will they be able to transition and support their clients when it comes to the wide range of digital assets that may be available today or in the future? And I want to just kick that to the panel, and anyone can jump in and respond to that.
Well, I think I'm the only traditional asset manager on the panel, so I'll take the first crack at it. I think I'll try to figure it out. So as a factual matter, WisdomTree has a Bitcoin listed or Bitcoin exchange traded product in Europe. where a different type of client set than the US, a lot of institutions, but really functioning in a similar way to what a gold ETP would look like, where there's a basket of this kind of real asset commodity, whatever you want to call it in that parlance, where you have an exchange traded product on top of it, working within a lot of workflows that exist over there. I think this is something that's just going to continue to evolve over time. I mean, there's various ways you can kind of get involved today from other asset managers who wouldn't necessarily be called traditional in the US. And obviously kind of the elephant in the room is what's going to happen with a Bitcoin ETF over time. I think one of the things you should look for from traditional asset managers is the expression, know what you own. Obviously, structure is very important here, where you may think you're owning Bitcoin, really you're owning a share in something that may or may not trade at a premium or kind of interact in some way that affects how you and your clients experience it. So I think we're going to need more guidance from the SEC over time, and I think kind of the traditional managers will just need to continue to evolve. I think people will continue to do so. We're obviously looking at it, and over time, things will kind of move in this direction.
I also think there's a, the old adage, two guys in a Bloomberg or two girls in a Bloomberg, right? You just sort of pop up in traditional assets and in traditional products, and you fire up your Bloomberg, you get your prime broker, and all of a sudden you have a fund or you have a product. This space requires an enormous amount of operational lift, right? From the fact that all the custodians are new, all of the auditors are new, the fund administrators are new, the service providers are new, the research providers are new. There is a big operational lift to getting into this space, and it's that gap is closing because of the Grayscales and the BlockFis of the world and all the people on this panel who are doing some of these things. But it's a lot of work. The traditional asset manager can't just jump into this like they could another asset class because it's a hot sector or it's a hot thing to invest in. So while I agree that the large asset managers always will have a presence at some point, there's a much higher probability that they are buying native digital asset firms than they are that they're building in-house. There'll be a few exceptions to that, largely because it is a lot of work to put this the operational infrastructure. I mean, Arca's been around now for 3 years. We've had investors doing due diligence on us that entire time. And I used to work in credit funds and equity funds where the due diligence process would take 18 months. And that's when they already knew the fund manager, the asset class, the expected returns, the service providers. Now everything is brand new. So that due diligence takes a long time and the operational setup takes even longer. So I don't think you're going to see top tier traditional asset managers get into this space as fast as you might think. Obviously, again, there'll be some exceptions like WisdomTree who moves a little faster, but it's going to be difficult. And I think you're going to have to be prepared to look into other asset managers that maybe have a strong pedigree, but don't necessarily have the name recognition that you'd expect from, say, a BlackRock or an Oaktree or something like that.
Yeah, I mean, I guess just to piggyback one thing, I mean, there are some notable exceptions, and they are notable, right? Like Fidelity, no one can say Fidelity has not moved incredibly aggressively here, and they're as traditional in name as they come in terms of their ability to custody. Obviously, recent OCC guidance around that banks can custody cryptocurrencies and digital assets. I mean, that's huge too. And JP Morgan just announced this week that they've got a big blockchain-based initiative more on kind of payments and wholesale payment side than on, I think, cryptocurrency and Bitcoin as we're talking about it today. But I think that's all to say that, I mean, things have moved a lot in the past 2 years in terms of what's available out there and where the legacy institutions are in terms of servicing this. And I think it's going to continue to move that direction. So yeah, just to say things are moving quickly.
Hey, Zac, I think you wanted to say something on this.
Yeah, I was just, as a firm that works with a lot of asset managers today who kind of, run the full spectrum between Jeff's analogy of, a couple folks in a Bloomberg. So like a true kind of startup asset management firm created specifically to target this space, all the way to more established firms who incorporated some of the listed products, whether that's, GBTC or Bitcoin futures or Bitcoin options into existing strategies, multi-strategy funds that they already had running. Some of them have even seen success in doing that and had a subset of their clients pound the table and say, I want to be able to allocate more just to that part of what you're doing in the crypto market. And others have sometimes said, JP Morgan says crypto is a fraud. Like, I don't want any exposure to that. And so then they'll they'll incorporate crypto strategies into existing funds, and then inevitably spin that out. And they've had real success there. A lot of folks have. I think that because of the inefficiencies in this market, one of the areas where you've seen the most kind of rapid adoption from asset managers is in kind of market neutral arbitrage or proprietary trading type firms. So that's just to highlight that there are things to do in this space where you're not even necessarily taking direct exposure to the price movements of the asset, but you're generating attractive risk-adjusted returns purely from the fact that there's this emerging and nascent asset class where folks who do arbitrage type strategies can make pretty compelling returns with strategies that in traditional markets don't work anymore because they've been optimized out with market efficiencies.
I just want to also just real quickly to both Will and Zach's comments. Fidelity Digital Assets is a completely different entity than Fidelity. They've also been working on this for 6+ years, and they also only have a single limited product offering, which is Bitcoin custody and Bitcoin trading. So that's not a knock on Fidelity. Fidelity has a 50-year time horizon, while the rest of us have a 50-day time horizon, maybe. But they, just to show again how long it takes operationally and from an infrastructure standpoint for traditional asset managers and wealth managers to get into the space.
I can add to that just to kind of piggyback off of what Zach said. We're fortunate enough to be able to provide solutions through our products for an increasing number of traditional asset managers, whether it's hedge funds or otherwise. So, I can add that they're definitely taking advantage of the structures that already exist out there.
Yeah, I mean, maybe Ray knows the stat better than me, but I saw a stat the other day. It was about the Grayscale Bitcoin Trust, GBTC, which isn't an ETF, but if it were, it would be I can't remember if it was top 50 or top 100 global ETF by fund flows and AUM. Do you remember that stat, Ray? Do you know which one I'm talking about?
I don't off the top of my head, but let me take a look.
Yeah, so it's huge. It's already happening. I mean, it's already happening. You can buy GBTC in a brokerage account, and if it were an ETF, it would show up on a lot of lists in terms of size of inflows, in terms of performance, and other key metrics.
Good. Yeah, so I think we're naturally flowing into, I think, the next part here that I wanted to touch on, which was, looking at kind of the investment option landscape and looking at what's currently available to advisors and their clients. And I think, maybe we can kick it off with Jeff, and maybe you can talk a little bit about, the R coins and that pioneering offering that you guys completed, and also Ray, just kind of the suite of investment options and offerings you have, with Grayscale. I think that could provide at least a starting point for us.
Definitely, I can kick that off. So our mission is pretty simple. We provide access to digital currencies for individuals, for institutions, in the form of a security that fits within operational and legal frameworks. And so we have 10 products today. 9 are single asset products. We have a diversified product, and all of these products are structured in a form that should be familiar to investors and to their advisors. So they have tax statements, they have QSIPs, they have audited financials, and 2 of our products to date are even SEC reporting. So our Bitcoin Trust and Ethereum Trust, are SEC reporting. They file 10Ks, they file 10Qs.
Sure. And at Arca, we're sort of the barbell approach, around what Ray is talking about. So, as I mentioned earlier, we don't think cryptocurrency itself is the entirety of this digital asset market. So on the one side, we have Arca funds, where we have private fund vehicles that only institutional investors can invest in, and we're using research-based fundamental analysis to come up with the tokens that we invest in this space. And again, they have very little to do with Bitcoin or Ethereum. For example, one of our themes is that we think there's going to be a high digitization of fan experience, right? Meaning fans are not going to go to music concerts anymore, go to live events. They're going to want to have that fan experience at home. And there are blockchain-based assets that we're investing in that represent that theme. Again, that's for some people, not for others, but that's certainly nothing to do with Bitcoin or Ethereum or some of the other things that are quote unquote cryptocurrencies. On the other side of our business with Arca Labs, and you mentioned Rcoin, Really what we're trying to do is we're trying to be pioneers looking to lay the groundwork for the digital securities ecosystem, because we think one day digital securities are going to replace traditional securities. We think all assets will eventually be tokenized. So the Rcoin structure, it is a 40 Act product. It is, bankruptcy remote, all the same protections that you would, are used to in any other 40 Act product. But it is a short duration bond fund. It is literally, essentially a money market fund or a short duration yield type product where you own Rcoins, which are Ethereum-based tokens to represent your shares. So what does that mean? You don't have to go through a bank or a brokerage account to transact in these. You can use them to send payments on Saturday at noon in 10 minutes. You can pay for dinner with them, right? I mean, there's all sorts of use cases of blockchain assets. That's the whole point of this peer-to-peer technology. We just did it having the underlying asset being a real security in government bonds rather than, the trust of, Bitcoin and a decentralized network. So completely different type of a product. But the whole goal is once we have this solid infrastructure in place, we think all types of assets will be able to be put into these vehicles, just like all types of assets are now in ETFs, right? The ETF itself didn't invent what was in the ETF. The ETF was a structure, and then you could put anything in that ETF, just like WisdomTree and a lot of other pioneers did. They created tech ETFs and biotech ETFs and all these cool things inside the ETF. That's what we're doing with this Rcoin structure. It is a structure that right now holds bonds, but there will be multiple products in the future.
And then kind of moving from like what the current options are, maybe, Zac and Will, you can kind of jump in and we can talk a little bit about how they're evolving. And maybe some of the trends you're seeing in the digital space.
Sure, I'm happy to take this. I think or start. So I think one of the trends that we're seeing is a reduction of volatility and increase in volume availability, especially across these regulated trading venues, both for products like GBTC, which is more, I would think of as like spot exposure to Bitcoin, but also notably in derivatives products, whether it's futures or options. So the asset class is maturing, and with that comes a broader like capability set that makes it appealing to more people. And there's the institutional side of it, but then there's also what I think of as like the fintech and retail side of it. And so you're seeing cryptocurrencies get integrated onto almost every fintech platform now, and not just in the US. This is a global story. It's happening in Japan, South Korea, Western Europe, Eastern Europe, South America. So the PayPal news, was one of the bigger headlines. But fintechs are eating a larger and larger share of banks' business, and fintechs have been very quick to add cryptocurrencies trading onto their platform. So you just have more, you have so many more paths to adoption. And for Bitcoin specifically, where you've got an asset that has a capped supply, and you've got the monetary actions of central banks that Ray alluded to earlier, it paints a picture that to folks like us on the call feels pretty obvious on like where we're headed.
Yeah, I mean, I think it just depends what you're trying to solve for. Kind of going back to the start, one of the major threads through this conversation is digital assets is an incredibly large bucket of stuff. But if you're just talking about spot Bitcoin prices, I think you're going to continue to see kind of more and more ways to do innovative stuff like what Tyrone's doing, kind of in an SMA type structure. You've obviously got Grayscale, and ETF is obviously hanging out there, and that's something that exists in other countries as well. So I think it's really what you're trying to solve for. And if people who are looking for venture type investing in new protocols, things like that, I mean, that's going to be kind of one angle of it versus the spot Bitcoin. So I think they're all kind of moving in different parallels as is kind of appropriate.
And Will, you mentioned earlier about the announcement by the OCC and their view that national banks can act as custodian and provide custodial services to cryptocurrencies. What do you think that effect, that action will have on, I guess, expanding the the universe of investment options from, for crypto?
I mean, I think it's just going to continue to, just grow and expand from there, like you said. I mean, related to like what Jeff said around digital securities. I mean, one of the bigger questions in the past for people who've been monitoring the space is FINRA and the SEC have been reluctant to let broker dealers custody digital assets, which could include digital securities. So that's something that's kind of been, I'd say, maybe it's rightly done, but it's certainly slowing things down, or not allowing things to move as quickly as some issuers or other people might like. But kind of tying into how is this distributed ledger or blockchain technology going to impact not just capital markets, but payments, a whole bunch of other things above and beyond what Bitcoin itself is today. I think you're going to need more and more regulated financial institutions kind of having the permissions and the technology to look to do stuff like that. So I think the OCC announcement is big. I think the JP Morgan announcement is big. I mean, these firms are investing in it, even if they're not talking about it publicly. Many of them have 50, 100-person teams that are just within one of their skyscrapers or now working from home working on this. So I just think it's going to be, continued evolution with real, and at the highest level, I mean, it actually has some, national security implications. China's made a big deal out of their digital yuan and how that's tying into Belt and Road and things like that. I think you can evaluate that on a number of different levels, but from the US government's perspective, this technology is here and its biggest kind of geopolitical adversaries investing a lot in it. And, we just need to think about how, we're going to all fit into that going forward.
Actually, it reminds me of a conversation I had with a Merrill Lynch financial advisor that's a good friend of mine recently. I was trying to explain all the nuances and all the unique properties of what blockchain-based assets can do. And again, going back to like the ETF example, how all these different types of structures can fit into this vehicle. And it dawned on him, it was like a light bulb going off over his head. He said, think, like, what is my job as a financial advisor? My job is to bridge people's from today to their future liabilities, right? And we use debt and equity or maybe real estate as an investment tool to get us to pay those future liabilities. And what are those future liabilities? It can be housing, it can be healthcare, it can be travel. That's a financial advisor's job, right? How do I get you from today to being able to pay those liabilities in the future? Well, one day, very soon, you might have very specific blockchain-based assets that do just that. You might be able to invest in a healthcare type token that basically is an investment today that gives you utility in the future through that token to use for your healthcare payments. Or you might have a travel related token that if you invest today, it gives you utility in the future to redeem in the form of the equivalent of like loyalty points or reward type points. So the unique attributes and properties of blockchain again go way beyond Bitcoin. I think Bitcoin is a very, very good investment. I think Ethereum is a good investment, but it's a very different use case than where I think financial advisors might be looking at in the future in terms of meeting those future liabilities for their clients. So we're not there today. There's not a lot of those examples yet where you can invest, but going back to what Tyrone has said earlier, that's why the education today is so important. You have to understand how these structures work. You have to understand the differences and the unique properties of all these different types of assets, because eventually what you're trying to do is match the assets that exist to the needs of your clients. And it may not be a one-stop shop or a one asset fits all type of investment strategy.
And I think I'd add that the OCC action is unambiguously positive in that it continues to increase the on-ramps. And at the same time, a lot of these incumbents don't have the domain expertise that we've been talking about. And so there's going to be a fallout, which is going to involve, I think we're going to see more consolidation potentially. I think we're going to see sub-advisory agreements between banks or sub-custodial agreements between the banks and digital asset custodians that have been doing this for a long time and already have spent years building that expertise. Because I think otherwise they might have to play catch up and they might not want to do that.
So I wanted to, as we're talking about investment options and things to come, I want to address a question that we received from someone, one of the folks that's attending, about a Bitcoin ETF, a registered Bitcoin ETF that could be made available to retail investors, and why we haven't seen that yet, and do you think that we'll see it in our lifetimes?
I'll jump in there. And, the SEC has been pretty clear with their letter and their guidance in terms of what they expect from the overall market. It's less of what the issuers themselves need to do as to what the kind of market infrastructure needs to be like to meet it. So I think that's, we've seen a lot of growth in that, and I think there's going to continue to be growth in that, and hopefully the market's mature enough at one point to kind of meet their standards. Joe, I think the ETF is important. I mean, we're big believers in the ETF structure, transparency, tax efficiency, and liquidity. You kind of going back to know what you own and know you're able to buy it, all these sorts of things, which I think a ETF structure does very well. But that said, the SEC's got their reasons and they've been very clear about it. So I'm not one, and we're not a firm to kind of go out and lobby one way or the other on this and kind of say they should be doing this like some people in the space. But I think it's just going to be kind of a continued evolution as the market matures.
Yeah, and to add to that, I absolutely agree with that. It's definitely the underlying market, fraud, manipulation, surveillance, sharing, all of those things. And, but to answer the other part of the question, I definitely think it's something we're going to see in our lifetimes, at least if my lifetime is as long as my hope and expectation.
Yeah, I mean, there's been a few things that I would put in the bullish category for ETF potential around either regulatory actions or just trends in terms of liquidity flows moving to either more US based or just in general regulated venues as a percentage of the overall liquidity in space. So I think that trend will continue, both in terms of enforcement actions against folks who aren't complying with certain regulations, and in terms of the percentage share of liquidity that's happening in regulated venues relative to the overall pie. And once that gets to a good enough place, you've got things like market surveillance and other issues that the SEC has flagged. I'm sure we'll get an ETF. Is it 1 year or 10 years? Like, I don't know.
And Zach, maybe I don't think you really got into this. Maybe just a little bit. You can talk about the crypto lending that you have experience with at BlockFi. Just to maybe share a few notes on that.
Yeah, sure. I mean, look, every asset class in the world needs access to financing or debt and credit, and we make that available at both the retail and institutional level. So whether you're someone who bought Bitcoin at $100 and now it's 13,000, you have a very substantial position, but you're still bullish on it. You don't want to sell it and take the tax hit. You'd rather borrow against it. We were one of the first companies in the world to make that possible. Or you're an institution who's looking to capture market arbitrage trading opportunities, or go short certain assets, or just have access to financing to expand the capital base with which you're trading in the cryptocurrency space. We help with products and solutions for all of those items, and it's been an area that's grown really quickly, despite Bitcoin being roughly flat. We started in the third quarter of 17. Bitcoin was north of 10K, but under 20K when we started. We're kind of in the exact same spot now. But the debt and credit side of this market has grown tremendously in that time frame, to the benefit of the overall ecosystem and market participants who leverage these solutions.
Thanks, Zach. So maybe, and Tyrone, maybe you can kick off this one. In terms of investment strategies that advisors can use with their clients to get off of zero. That's all you.
I mean, I always giggle at the whole get off of zero thing, because again, how do they do it? But I think here's what's the most important thing financial advisors need to do. The minute your client tells you they own crypto, reprofile them immediately. Risk tolerance, investment policy statements, right? What are their goals? Pull out that financial plan, go everything all over again, go right back to scratch, reprofile that client immediately. Where do you hold these assets? Do you own GBTC? Do you, I had a bunch of clients that was asking me about BlockFi. Zach will tell you, I went to BlockFi's office. I'm like, tell me about this. I need to understand, right? I've gone to WisdomTree. So you have to understand everything that is out there. So where are your clients doing this away from you? Because if you are advising clients, they own crypto away from you, believe it. I get the DMs and the calls all week, right? So find out where they own it, how much they own, right? There was a situation where a client found out his client had millions of dollars at Coinbase, and the client didn't pay taxes on it, was getting paid on it. So these are issues that advisors need to know. Reprofile the client in the context of the plan that you have built with them. Start that relationship all over again from day one. Then the next thing, say, okay, my clients were young, crypto savvy, tech savvy. They custodied away. They were coming to me strictly for my advice. Should I sell some of my Bitcoin to pay down my student loans or buy a home or whatever? In the context of that client's goals, then you get into, all right, well, which of these investment choices that are out there currently make sense that allow me to, again, loosely fulfill my fiduciary duty, but also making sure that I am prudent and compliant with making sure that that client achieves their goals. Jeff mentioned this earlier in terms of what a financial advisor's, job is, right? I will expand that a little bit and say that a financial advisor's goal is to answer the questions that your client doesn't think to ask and then have an answer for them. And if you do that, you're providing value. So then with that client's goals and what they're trying to do, then you can say, hey, as I did, I had a young client, he had a ton of Bitcoin. He was like, I need some yield, right? And he asked me about BlockFi. There are some clients who want to collateralize and pay down, student loans or whatever else. And then there's some simply saying, hey, is this digital gold? Could I put this in my portfolio in the alternative sleeve or whatever? So there are options out there for that. But it all goes back to profiling the client on one end, the barbell approach. And then the other end is making sure that you're aware of all of the resources that are out there that you can then pin to that client's goals, not what product can you force in just to say that you gave the client access to crypto.
Ray, did you have something you wanted to share?
Sure, I think I would just echo a lot of what Tyrone said. I think for us, it's taking a proactive approach. And I think Tyrone covered that really nicely. It's definitely happening. They're buying the asset class, they're involved in digital currency, and it's only gonna become a larger part of the narrative. So I think taking a proactive approach, seeing it as an opportunity, rather than a threat or a risk of losing clients, perhaps seeing it as an opportunity to differentiate yourself and offer those solutions, and using the resources that are out there, and there's a lot. I mean, we created an entire toolkit for financial advisors, which is on our website and which I think is going to actually be distributed after this webinar.
Great. I want to bring in another question that's coming from the audience, and anyone can jump in. Feel free. Do you think that more privacy-focused crypto assets have a place in portfolios at all?
Whose portfolio? Whose portfolio?
All right. Well, as the only active manager on the panel here has a team of 10 research analysts doing research on these things. I would say this. We personally don't invest in any privacy tokens. We don't think there's any real value capture here. I think the nuance in digital assets, of course, is that is it investment? Is it an investment, or is it something that you're meant to use? And not everything that you use is going to have financial gain, and not everything that has financial gain is going to be usable. A lot of the best digital assets are both. It is giving you financial gain and it is usable in some way, shape, or form. Personally, I think the privacy tokens are really just for a very specific use case for moving money around without having anonymity and nobody seeing it. I'm not sure there's a big enough total addressable market for hiding everything that you do that's going to make this a suitable investment. I mean, it can certainly go up and go down as all digital assets do. I wouldn't say that it necessarily is the best research-based investment. Now, that said, in an overall portfolio allocation, if there is a reason for having some sort of a hedge to other things that your clients own, or you think there is a specific theme that you're trying to fit for your client and a privacy token fits that theme, then I think it's fine, right? I mean, a lot of times I use the analogy of like healthcare, right? Nobody really understands healthcare. Nobody understands how hospital admission rates work and Medicare reimbursement and phase 3 drug trials. But a lot of advisors have learned that healthcare is a real sector and we want to have some exposure to healthcare for our clients. And maybe we'll buy a healthcare ETF or invest in a healthcare specific actively managed fund. You don't have to know all the details and the nuances of everything in there to learn that overall it fits a theme and it fits a risk reward characteristic that we're looking for our clients. So I'm not shutting the door on it if it fits for someone. From a purely research standpoint, I don't believe they actually capture any value.
And I can add to that. I think at the end of the day, there's thousands of tokens, protocols out there. We don't know longer term, where there's going to be maybe a handful that have real value that continue to serve a purpose. For me, I personally think of privacy tokens as a part of a diversified portfolio. And, we have products for them, but it just, again, comes down to risk tolerance and diversification.
Great. So in the remaining minutes here, I think maybe we could, I'll just kind of go back to the panelists and just ask for some final advice they have to offer to financial advisors around the digital asset space and considering whether to, bring their clients into those investments. Will, you want to kick it off?
Yeah, I mean, just reiterating something that I said, know what you're trying to solve for. If you're trying to solve for a real asset kind of equivalent to gold, although Bitcoin doesn't necessarily have the same return pattern as gold, but it's got a similar investment thesis, you could say. That's one thing versus trying to do something totally different, speculating, generating alpha, whatever it is. So, just know what you're trying to solve for. And then when you're trying to solve for it with actual products, actually know what those are too and what limitations or not there are on those is really important.
Yeah, I would say it's a great time to own Bitcoin in your PA, and for your clients, I think you should just set yourself up in a way where when you get the question of should I buy some Bitcoin, you have a really concise and clear and easy to understand answer, not just on whether they should have some exposure or not, but also in terms of how they could do it with you.
I would just say, I think there was 100+ people on this call. I expect Tyrone to be getting 100+ calls in the next hour after everything he just said. But in all honesty, I think I've never, I've managed equity, I've managed debt, I've been across investment banks, broker dealers, hedge funds, et cetera. There's never been a more open industry than the digital asset industry. Everybody is public facing. Everybody is putting content out there. Not everybody, but a lot of people are putting content out there. Everyone's accessible and reachable. At this point, I can honestly say there's really no excuse not to have some sort of a knowledge base of this asset class, because there is a plenty of resources out there to learn and to educate yourself on what the space really is and what these investment opportunities are beyond maybe what you just see on CNBC or what you see on a Bitcoin price flashing across your screen.
Yeah, again, I would just say see it as an opportunity. Be proactive and really take advantage of all the resources that are out there.
I'll end by saying, if you are an advisor out there, and again, SEC registered, onrampinvest.com, sign up for the wait list, but want to leave most of the time here to say we are facing a hunger crisis in this country. 1 in 3 children in America is hungry right now. That is an issue. And if anyone has the power and the ability, I encourage you, as soon as you log off of here, please do what you can to make sure no child in America goes hungry tonight. I appreciate you.
Well, I think that I'm just going to wrap it up and turn it over to Patrick in a second, but I want to just thank all of our panelists. I think they did a terrific job on this panel, and I hope the audience enjoyed this discussion as much as I did moderating it. So thank you, and I'll turn it over to Patrick.
Thanks, Jason. And Tyrone, really appreciate the sentiment there at the end. So appreciate the altruism on the panel.
Appreciate you. Appreciate
that was a heck of a 60 minutes. There was a lot to pack in here. Jason, really phenomenal job moderating the panel. And then Tyrone, Zach, Jeff, Ray, Will, really appreciate you all taking time out of your day to to help provide this information to this audience of financial advisors. For those of you on the line, we'll be making the recording available afterwards. You can now consume all 3 webinars on our YouTube channel. That should be available in about an hour, but we'll email you all with the link. And then we'll also be providing some resources from each of these panelists and ways in which you can get in contact with them if you want to learn more. So thank you again. And we really hope that everyone has a great rest of your afternoon here.
Love and light all.
Thanks, everybody.
Hi, thanks, everyone.